Hello, everyone. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started right away. It's going to be a quick one today. Markets are up slightly. Dow Jones up 0.2%, Nasdaq flat, S&P 500 up 0.1%, Russell 2000 up 0.6%. Oil prices are down slightly to $66 per barrel. Major shift in the yield curve today. 5-year Treasury yield is down 4 basis points. 30-year Treasury yield is up 2 basis points to 5.04%. 10-year is at 4.48. Let's look at the S&P 500 heat map. Microsoft down 0.5%. NVIDIA down slightly. Micron is down 4% today. Tesla is up 3%. Amazon down 1%. Meta down 1%. Google up 0.7%. Healthcare stocks are up across the board. Financials are mixed. Consumer defensive stocks are mixed as well. Uber is down 2%. We have some news on Uber in a little bit. Trump says not planning to fire Fed Chair Powell after reports suggest Powell ouster coming soon. That was an interesting few minutes earlier today. President Trump on Wednesday tempered reports from earlier in the day that suggested he planned immediately to fire Federal Reserve Chair Jerome Powell. That latest twist in the ongoing saga regarding Trump's displeasure with the central bank's head. Speaking to reporters in the Oval Office late Wednesday morning, Trump said he is not planning to fire Powell, though reiterated his view that rates should be lower and the Fed chair is doing a terrible job. Trump's comments came just about an hour after a slew of reports suggested the president was inching closer to firing Powell. Bloomberg reported that the president was likely to remove Powell soon, quoting a White House official. CBS News reported that Trump indicated to lawmakers he would do so while polling House GOP members Tuesday night about whether he should go through with it. This is interesting. I didn't realize the sources that perpetrated this rumor was Bloomberg reporting that the president was likely to remove Powell soon, and CBS News reporting Trump indicated to lawmakers he would do so. That's interesting. So this is a little bit more than a rumor. Okay. The New York Times reported that Trump even showed those lawmakers a draft of a Powell firing letter in the Oval Office Tuesday night. But Bloomberg and the New York Times also both noted in their reports that Trump has not made a final decision. Following Trump's comments on Wednesday, markets erased some of the losses suffered after the initial reports Trump would fire Powell in short order. Trump also said Wednesday he had not drafted a letter regarding Powell's firing. Wow. These signals of a possible firing come after Trump on Tuesday told reporters that Powell's handling of a $2.5 billion renovation of the Federal Reserve headquarters sort of is a fireable offense. Any final move by the president to oust the Fed chair could lead to a legal war with Powell, who has argued he can't be removed by law. The president also appeared in his latest comments to narrow his choices to replace Powell. Treasury Secretary Scott Bessent is an option, but not the top choice because I like the job he's doing, he said. The Washington Post and Bloomberg reported this week that National Economic Council Director Kevin Hassett is rising as an early frontrunner in the race to replace Powell, although former Fed Governor Kevin Warsh is also under consideration. Fed Governor Christopher Waller is another possibility. I think it's going to be Waller, but we'll see. Bessent, though, is probably not that much of an option, Trump said Tuesday, citing what he views as his good performance as Treasury Secretary. He's a very soothing force. Trump has been hammering Powell for months over what Trump viewed as a refusal to ease monetary policy for political and personal reasons, referring to Powell publicly as dumb, a numbskull, a stubborn mule, a stupid moron, and a fool. Yikes. A sideline Fed faces a new high-stakes dilemma that echoes its last big error. Tariffs have finally caught up to the conversation about tariffs. The price increases that businesses and economists have warned about for months have started to seep into the hard data, showing inflation accelerated in June for imported products entangled by the new trade policy. While rising pricing pressures were expected, there are large implications at play for Federal Reserve. Tariffs are one of the obstacles standing in the way of the central bank's inflation target of 2%, and the latest confirmation that import duties will rise costs boosted the chances of the Fed remaining on the sidelines. Market bets reinforce the idea of stationary Fed, at least for a few more months. The lock-on expectations for no rate change in July intensified to a near certainty, rising to 97% according to CME FedWatch tool on Tuesday. The heating up of inflation in June, while close to expectations, is a step in the wrong direction that will keep the Fed on the sidelines at the upcoming July FOMC meeting, Scott Anderson wrote in a note. And the likelihood of another Fed meeting ending without a cut also increased for September, rising from 37% a week ago to 44% after the latest inflation report. Yeah, I think September is kind of questionable too now. Because of the second round of these tariff discussions, I think August is shaping up to a pretty interesting month. There's a way to interpret the inflation reading that suggests tariffs will have a much more muted impact on the overall economy than many market observers had feared. It's true that prices for goods, including furniture, clothing, and appliances, ticked up, but overall inflation remained relatively modest. Part of that more optimistic take also views tariff-related inflation as a part of one-time price increase that the Fed should look past, a fleeting moment rather than a destabilizing paradigm shift leading to escalating prices. It may be, to use a word that may make Fed officials shudder, given the last time they used it got it wrong, transitory. But there are issues with this rosier read. Even if the tariff impact could turn out to be momentary, which isn't a sure thing, the fresh rounds of tariff threats and uncertainty around White House deal making could produce future price shocks, each with its own ripple effects that will take time to suss out and measure. If the recent tariff analysis threaten to go into effect, it will take a few months for additional boost to inflation to be felt in goods prices and will keep the Fed on the sidelines unless the labor market takes a sudden turn for the worse. Now, we got the PPI report today, which is kind of interesting, but there's some underlying issues with it. So let's talk about that. US producer prices were unexpectedly unchanged in June as an increase in the cost of goods because of tariffs on imports was offset by weakness in services. The unchanged reading in the producer price index for final demand last month followed the upwardly revised 0.3% rise in May. So the May figure was revised from 0.1 to 0.3%, and the June figure came in at 0.0 as opposed to 0.2% expected. So if you just add those 2 months together, basically as expected. But there's a lot of noise happening with this PPI report, especially coming from the government officials today on X. The Labor Department's Bureau of Labor Statistics said on Wednesday, economists polled by Reuters had forecasted PPI rise of 0.2% after a previously reported 0.1% gain in May. In the 12-month through June, the PPI increased 2.3% after advancing 2.7% in May. Data on Tuesday showed consumer prices picking up in June, with solid gains in tariff-exposed goods like household furnishings and supplies, appliances, sporting goods, and toys, as well as windows, floor coverings, and linens. Economists said June's CPI report was likely the start of the tariff-induced increase in inflation from the import duties announced in April. But some expect a slower services price growth because of softening demand for travel and hotel accommodation to partially offset the boost to inflation from tariffs. President Trump last week announced higher duties would come into effect on August 1 for imports from a range of countries, including Mexico, Japan, Canada, Brazil, and the EU. Economists expected these tariffs would keep goods prices elevated through the end of the year. The Fed is expected to leave its benchmark overnight interest rate in the same range. Prior to PPI report, economists estimated that the PCE price index, excluding the volatile food and energy components, increased 0.3% in June after rising 0.2% in May. The so-called core PCE inflation was forecast to have advanced 2.8% on a year-to-year basis after climbing 2.7% in May. After the PPI report, though, I think some of those estimates are revised downward. So it looks more like 0.2% in June, and the year-over-year I think it's going to be more like 2.7%. Okay, I think 60% of the PCE price index comes from CPI, pretty much directly, and then some of it comes from PPI. And so, yeah, looking more like somewhere between 0.2 to 0.3%, probably close to 0.2%. UK inflation unexpected rises to 18-month high of 3.6%. So this is interesting. UK inflation unexpected rises to 18-month high of 3.6%. UK inflation unexpected rose to an 18-month high of 3.6% in June in a setback for the Bank of England as it tries to cut. Okay. Now, in company-specific news, Baidu's Apollo Go partners with Uber to boost autonomous vehicle deployment in the global market. On July 15, Apollo Go, Baidu's autonomous ride-hailing platform, announced a strategic partnership with Uber to deploy its autonomous vehicles across multiple global markets. The collaboration aims to roll out thousands of autonomous vehicles under the Apollo Go brand, delivering safe and reliable driverless mobile services to a broader user base worldwide. So we now have Waymo and Baidu expanding globally. Under the agreement, the two companies plan to launch Apollo Go's sixth generation autonomous vehicle in select cities across Asia and Middle East by the end of its year. The service will then expand to additional international markets. Once operational, Uber users will be able to request rides in Apollo Go's autonomous vehicles directly through the Uber app. Robin Lee, founder of Baidu, said, "Our mission is to make autonomous driving accessible to more users in more markets. Partner with Uber marks a major milestone in Apollo Go's global deployment. Together, we aim to offer passengers around the world a safer and more efficient way to travel." Uber's CEO, Dara, echoed the sentiment, stating, "This partnership brings together two of the world's most innovative technology companies to shape the future of mobility. As the world's largest mobile platform, spanning ride-hailing, delivery, and freight, Uber is uniquely positioned to scale Apollo Go's autonomous driving technology across global markets." Apollo Go has already deployed more than 1,000 autonomous vehicles in 15 cities worldwide, including Hong Kong, Dubai, and Abu Dhabi. The platform has provided over 11 million rides and accumulated more than 170 million kilometers of safe autonomous driving operations, underscoring its technological maturity and global readiness. So, I mean, this is basically 100 million miles, which I think where Waymo is. And I think Waymo just crossed 10 million rides as well. So, wow, they're surprisingly at the same level. Okay. Stocks endured a wild ride in the second quarter. It was great news for big banks. There's some bank earnings this week, so let's kind of get a review of this as the last article. The second quarter of 2025 was a great time to be a stock trader at one of the country's major banks. The equities trading desks of all five of the bulge bracket banks, JP Morgan, Goldman Sachs, Morgan Stanley, Citigroup, and Bank of America, posted double-digit growth compared to the second quarter of 2024, as traders revealed in the whipsaw volatility sparked by Trump trade fight that escalated in April. Goldman Sachs' $4.3 billion worth of business for its trading group was enough to break the Wall Street record for stock trading revenues in a single quarter. This marked a 36% jump from the same quarter last year. Morgan Stanley attributed its 23% rise in the net equities revenues in part to higher client activity, while B of A put its 10% growth down to performance and increased client activity. On Citi's Tuesday earnings call, bank CEOs said, "In Marcus investment in our trading platform have allowed us to handle record volumes with ease." The fortunes of investment banks' equity desks, which buy and sell stocks on stock-related products for the bank's clients, are typically tied to volatility rather than whether stocks are going up or down. Between President Trump's Liberation Day tariffs, the subsequent tariff rollbacks and the rollouts, and the Israel-Iran conflict, and myriad of other market-moving events, S&P 500 recorded some of the biggest 1- and 2-day swings on record during the quarter. CBO volatility index, a measure of implied volatility, often referred to as the fear gauge, hit its highest level since the throes of COVID-19 pandemic in April. Asked on JP Morgan's Tuesday earnings call how much the bank's trading performance could be chalked up to strong and conducive environment, CEO said, "I was not surprised by the market conditions." Robinhood stock also has surged in recent months, rising more than 160% in 2025, as the retail trading giant has benefited from these volatile market conditions, along with the Trump administration's embrace of the crypto industry. Robinhood is set to report earnings after market close on July 30th. On that note, thank you very much, everybody, and I will chat with you all next time. Take care.